I'll share my screen. All right, so I'm just gonna do a quick introduction. I apologize for how this slide looks. I could not get it straightened up, but anyway, so welcome to the Fair Idaho Roundtable. I wanna welcome Lorin Port. Lorin has been instrumental in helping our organization, our little nonprofit, with financial resources, but also a lot of independent food and beverage businesses throughout Idaho. She's been a wealth of information about COVID-related government support for all businesses. So anyway, I'll let just do some brief housekeeping and we'll let Lorin speak. But I muted everyone's microphone upon entry, but if you could just make sure you keep your microphone muted, control background noise if you do speak. And then we'll probably, Lorin, are you okay if we just do a Q&A at the end of the roundtable?
Absolutely.
For 15? Okay, awesome. And then feel free to type any questions into the chat box or raise that little Zoom hand if you want to speak. This is an open forum at the end we'll do when we do the Q&A. And then just to let everybody know, we really pulled this off quickly. It was me attending the Leadership Idaho Agriculture class, actually with Nicholas that's on this call, and realizing that we needed to get some financial resources and opportunities out to our farmers. I think we'd spent a lot of time looking at COVID relief for restaurants and businesses, but we wanted to do a very specific session roundtable for our farming community. So I will be recording this because I got a lot of requests to actually send this out after we're done. So I'll give you a brief introduction of FAIR. My name is Katie Baker. I'm the Executive Director of FAIR Idaho. FAIR stands for Food, Agriculture, Restaurants, and Establishments, meaning beverage establishments. We are a nonprofit trade association that represents over 250 independent food and beverage businesses across the state of Idaho, really everything from field to fork. And so our goal is to advocate on behalf of our members, but also connect and promote, because within our organization, we have producers and retailers. And so there's an opportunity to create a more resilient food system here in the state of Idaho. So without further ado, I'll let Lorin start. Thanks so much.
Hi, everybody. I'm going to share my screen. Minimize that. Let's see here. Okay. Welcome, Fair Idaho members. Katie already did a great introduction, so just want to introduce myself. My name is Lorin Port. I am the proprietor of One Abacus, which is a small advisory services group here in Boise. I've been working with Katie and many establishments in Boise, Salt Lake City, up in Seattle, helping with all of the COVID-related grant support, which includes PPP, restaurant revitalization, and a lot this year on the employee retention tax credit. And doing a ton of the ERTC, which is the employee retention tax credit work right now, which is also in coordination with helping folks apply for forgiveness if they've received that second round of PPP. So here to help you. And I figured I would just go over and kind of tell you a little bit about the available resources out there and how you could go about obtaining those. For the farms, my services are free. I will do all the work needed to help you get this funding if you qualify for it. And I can go through the process and help you with that. So without any further ado, let's get started. Today's webinar is going to cover the employee retention tax credit. I'll tell you all about it, what it is, if you qualify, any impact of payroll protection grants on that, how much you can qualify for, and then a few other resources that are currently available to farmers. So what is the Employee Retention Tax Credit? The Employee Retention Tax Credit is a refundable payroll tax credit equal to 50% of qualified wages an eligible employer pays to employees between March 12th of 2020 and December 31st of 2020. And then that was increased as of January 1st, 2021, to 70% of qualified wages an eligible employer pays to employees between January 1st and September 30th. The new infrastructure bill does include a sunset of the ERTC after third quarter of 2021, unless you were a startup after February 12th of 2020, you could still qualify for Q4, but I will go into a little bit more of that. So does your farm qualify for the Employee Retention Tax Credit? There's two ways to qualify. The first is a gross receipts test, and the other is called the alternative test. The gross receipts test just means that you experienced a reduction in your quarterly gross receipts, gross revenues of 50% or more in 2020, or 20% in 2021. And this is all compared to the same quarter in 2019. 2019 was kind of used as a base year where everything was going along, quote unquote, normally. And then, so as we got into 2020, if you experienced a greater than 50% reduction or a greater than 20% reduction in your receipts in 2021 compared to 2019. The alternative test is more of a gray area. It is where the government mandates impacted your organization's ability to operate in a normal capacity. And I think just about everybody in the food, agriculture, everyone experienced some sort of impact. And so the easiest test, of course, is this gross receipts test. And then what we have is a list of all of the Idaho-based mandates that impacted on social gathering, in-person service, if people could go to work, all of those types of things. So if you qualify under one of these tests, you can receive up to $5,000 per eligible employee for 2020 and up to $7,000 per eligible employee per quarter in 2021. So I'm going to follow this with a sample to kind of show you how this is calculated when I talk about eligible employees. The other impact to the Employee Retention Tax Credit is if you received a payroll protection program grant, you can still qualify for the Employee Retention Tax Credit. That was a change as of the end of last year. It used to be prior to the end of 2020, if you had received payroll protection, you could not qualify for ERTC and vice versa. So what I can do is help you maximize both of these incentives. So here's an example of the Employee Retention Tax Credit. So say you have an employee that earns $12,000 in quarterly wages. The maximum qualifying wage amount for 2020 is $10,000 a quarter. So if you have an employee that makes $10,000 or more in a quarter, your credit is $5,000. Say your employee earned $5,000 in that quarter, then the credit would be $2,500. So it's 50% of the qualifying wages up to $10,000 for 2020. So you multiply that credit by your qualifying employees, and keeping this simple, if you had 10 employees with qualifying quarterly wages of at least $10,000, then the credit for 2020 is $50,000. So for 2021, it's the same $10,000 maximum, but you get 70% of that. So it's $7,000. And the difference in 2021 is you can qualify each quarter up to Q3. And in 2020, you could only, the maximum you could get is that $5,000 per employee. So for 2021, each quarter you apply. And like I said, it depends on if you had gross receipts reduction or if there was some sort of government mandate related to that specific quarter where you can qualify. So anyhow, so the potential is up to $21,000 per qualifying employee for quarters 1 through 3 in 2021. So the numbers add up fairly quickly. And how you receive this is you file a Form 941X. So Form 941 is your quarterly payroll report that you're required to send to the IRS every quarter. And it reports the wages that were earned, the taxes that were paid on those wages. And what happens is now you complete a 941X, which includes that credit amount that is calculated. And since you've already filed your taxes, you will literally get a direct refund from the IRS for this amount. So you file one for each quarter that you have qualifying wages for. Actually, I do that for you. And then you wait for the IRS to send a check. So that's how that has been working. I think I just said this, but this is how you do it. You file a 941X. It'll be an amendment to your original 941. And there is a line on there. Actually, there's 2 lines on there that include the credit, and it literally shows up as a credit that's owed back to you. And that those are done every quarter, and the IRS will send a check back to you. And it also, sometimes payroll providers want to complete these. So we just kind of go through each case by case, depending on who your payroll provider is and what their process is for this. So first steps to qualify, you determine if your business meets the gross receipts qualification. Again, you compare all 4 quarters of 2020 to 2019, same quarters, Q2 of 2020 to Q2 of 2019, and then you do the same thing. Actually, it's the first 3 quarters of 2021 to the same quarters in 2019. So 50% for 2020, 20% for 2021. And if you don't meet it in any of those quarters, or maybe you meet it in one and you don't meet it in another, you can use both of these if the business was partially or fully suspended by government orders. So it's been interpreted fairly broadly, and typically there's a lot of grace given to many of these industries, especially farms. So here's a simple sample of gross receipts. So say in quarter 1 of 2019, you had $100,000 in receipts. In quarter 1, you had the same. So you didn't have a reduction. And then quarter 2, you dropped 32%. You wouldn't qualify. Quarter 3, you went from 150 down to 70. So that's a 53% reduction. Quarter 4, 57% reduction. So you would qualify in both of those quarters, which means you can use eligible wages up to $10,000 per employee for the credit. As I'd said, 2020, it's for the whole year. So you take those eligible periods, you see where you have enough wages, and then you can get up to $5,000 at 50% for that. And then 2021, it drops to 20%. So both quarters that I have in this illustration would qualify for 2021. So that's the ERTC. We were also looking into other resources that are available to farms. I have a few of them here. One is fairly new, and so I'm just learning a little bit more about it. But if there's any organic farms out there, or folks that were in the process of applying, there's a program to receive money back for the costs incurred to either applying or maintaining your eligibility to be an organic certified farm. There's the Farm and Food Workers Relief Grant Program, which is fairly new, and that includes $600 flat rate payments to eligible farm workers, meatpacking workers. I know it's grocery store workers, or safety related expenses. That application period just opened, and it's open until February of 2022. And then there's also this Pandemic Response and Safety Grant Program and Seafood Processors Pandemic Response and Safety Block Program. provides grants to food processors, distributors, farmers markets to respond to the coronavirus, including measures to protect workers. And it's for costs incurred from January of 2020 all the way through the end of this year. That one is that has to be submitted pretty quickly. That's like next week. That needs to get submitted by. So I put that on here just to see if anybody wants to see if they can qualify for that. Again, I'm happy to help with any of this relief, doing research, finding out what we need to get the applications in, anything. So here's the key takeaways. You can qualify for ERTC even if you've received payroll protection. For the ERTC qualification, you've got either the change in your gross receipts. If you don't meet that criteria, facts and circumstances analysis is needed to show that you qualify based on the government orders. We do a detailed payroll analysis to determine what wages are eligible, which is gross wages per employee minus any PPP funded wages and any COVID-19 sick wages that were paid by the IRS. Planning is critical. If you haven't filed for forgiveness on PPP2, I can help you maximize both of those. If you already have been granted forgiveness, we just need to see what payroll dollars you used for that. And so we can try and fully utilize that ERTC. So anyway, that is it. Hope I wasn't talking too fast. I'm happy to help with some questions and answer Q&A. Back to you, Katie.
Thanks, Lorin. So did you mention, and maybe I missed it, anything about the Q4 and what will happen with ERC, or also, if people are eligible for 2020 and 21, a lot of our businesses that are involved with Fair Idaho were, what you can still basically get money for 2020 and 21.
Yes, they weren't saying that the deadline was Q3 to file. I haven't heard, I don't think the deadline, I think the deadline for actually filing for 2020 and 2021 will go into at least the first quarter of 2022. You can only qualify now through Q3 of 2021 unless you're considered a recovery startup business, which means that you started, literally your business started up after, I think it's February 27th of 2020. So that's the only way that you can qualify for Q4 of 2021. Otherwise, the new infrastructure bill sunsetted the employee retention tax credit after Q3, which was September 30th.
Awesome. Do we have any questions for Lorin while she's here? All right. Oh, there's Nicholas.
Sorry, Katie. It took me a second to get off of mute. Hi, Lorin. It's Nicholas Purdy with Peekaboo Livestock. I'd love to sit down with you and talk this through further and have you do payroll analysis of organization. We received a PPP loan and or grant, and we have had zero change in our payroll throughout this, but obviously significant impact on our organization due to COVID-19. So yeah, I think this would be very beneficial. Thanks, Katie, for setting it up.
Yeah, definitely. Katie, do you want to pass on my contact info to folks, or?
Yep, I have everybody's email. So what I'll do following this is just link everybody via email to you all.
Yep. Yeah. Just give me a call. Happy to talk through it all.
Outstanding. Sounds like a plan.
Great.
Yeah. And just so you know, what we experienced just within Fair Idaho, because we have a board member, George Nicholas, met him in Moscow when we were at Leadership Idaho Agriculture, but George really helped spread the word to all our Fair Idaho members. And it was really us going into everybody's business and letting them know about ERC. It was amazing how many people weren't aware of this opportunity, but also a lot of accountants still aren't necessarily aware of ERC or a little bit confused of who qualifies. So I think it's good with Lorin's experience for people to connect with her because she can tell you right away if you qualify or not. And it seems like, Lorin, I don't know from your experience, but it seems like just the feedback that I've gotten is that more people qualify than they think.
Oh, definitely. I've had so many people say, "Oh, my CPA told me that we don't qualify," you know, for one reason or another. A lot of it is, "Oh, if you got PPP, you can't get ERTC," and it's just amazing how much you know, bad information there is out there. And you know, it's been, I think I've literally been able to help everybody that has asked. So it, you know, whether it's, you know, if you're PPP covered almost all of your payroll, maybe you get a little bit, but I mean, Fair Idaho's a fairly small organization and they're pretty happy with what they've been able to get back. So it's something, you know, and something is better than nothing. That's for sure these days.
Well, are there any other questions? All right. Well, I will quickly put our email into the chat. It looks like I'm getting some chat response to connect you with more people, Lorin. So I will follow up and do that immediately following this. And thank you so much for taking the time. I appreciate you, Lorin, joining us and helping out our farmers. She offered to do this just because we want to make sure that our agricultural community has the knowledge and awareness of these resources, because I think there's a lot to navigate right now in terms of the COVID dollars out there. So we're just trying to help and do our part. Thank you for joining us, and we look forward to seeing you at the next roundtable. Thanks so much.
Thanks, everybody.
Thanks for hosting this. It was great.
Take care. Bye-bye.
Thanks.